What causes inflation is something called velocity, which is the turnover of money. The money has to be lent and spent. Banks have to be lenders. People and businesses have to be borrowers. You have to be spending it, get it in circulation, in other words, in order to potentially to have some inflation. And every now and then I'll see a headline that says, currency war has broken out. And I laugh. I said, no, it's the same currency war. It comes as no surprise that 10 years after the book came out, we're still in a currency war, and we will be for the foreseeable future. So that book is actually very fresh. It talks about Ukraine, talks about a lot of things that were way over the horizon. What you describe about the Chinese money supply is absolutely correct. People in the United States complain, the Federal Reserve has printed $4 trillion in the past year. And they have printed $4 trillion in the last year. They're taking the Fed balance sheet from about 3.5 trillion to 7.5 trillion. So yeah, we printed $4 trillion in the past year. Didn't do any good, won't do any good, but we did it. But Chinese money supply is even larger and growing faster. Now, I don't want to get into the weeds on China's internal monetary policy. I could, except to say that they're grossly over leveraged. The economy is investment driven, not consumption driven. They're about 40%, 45% investment. The U.S. is about 25% investment. So that gives you some idea of how investment is to the Chinese, which is actually okay if you're investing in productive assets that pay the way. They're not. They're wasting the money. I've been to China many times, been going back and forth there for 35 years. I've been out in the countryside. I don't just stick to the hotel lobby in Beijing. I got mud on my boots visiting these ghost cities. And the ghost cities are interesting. I was there one, south of Nanjing, kind of out in the boondocks a little bit. But I was, you always have Communist Party officials with you. They're keeping an eye on you. And so each ghost city, there are a bunch of them, actually seven. Imagine building 7 cities. That's what I saw. And so they got 1 or 2 skyscrapers, shiny new construction, some of it still under construction, all empty. So I said to the communists, I said, what are you guys doing here? I mean, nobody's here. Said, oh, don't worry. People will be coming from the countryside. They will be populating these cities. And I said, when? I said, no one's coming. And besides that, you've already drained the countryside. That already happened, 15 years ago. But I said, you cannot mothball a building. It's not like some old clothes. I mean, the way a building maintains itself, it gets occupied and there's maintenance and people fix it and all that. I visited, I used to travel a lot in Central Africa in the early 80s. Zaire at the time, today it's the Congo. I was in Kinshasa, but it was right after the 70s commodities boom. When cocoa prices and oil prices and copper prices were skyrocketing because of inflation. And they took the money, of course they wasted it, and they built these skyscrapers in Kinshasa. If you apply, generally accepted accounting principles to their investment account, you would write it off the day they open the building because nobody's there. It's not worth anything. So they're wasting the money. They're over leveraged. They're overprinted. However, none of that has anything to do with the status of the Chinese yuan as a global reserve currency. The yuan is not a reserve currency. It will not be, probably in my lifetime, maybe never. And I'll tell you why. Because a lot of people don't understand what a reserve currency really is. You get a report from the IMF and it says, 60% of global reserves are in dollars, which is true, and about 25% are in euros, which is true. So 85% of global reserves are in dollars or euro, which means the only meaningful exchange rate in the world is the euro US dollar cross rate. Everything else is working around the edges. You got some sterling and yen and Swiss francs and a couple other things. Aussie dollar is tiny, believe it or not, good currency, but not a big part of it. And China's like this kind of invisible 1% sliced down at the bottom. But it's not as if, and China has $1.4 trillion in its reserves. But here's the point. It's not as if they have pallets of $100 bills stacked up in the basement of the People's Bank of China. They don't. You invest in securities. In other words, they're dollar denominated securities. So it's not actually dollars. They're treasury bills, notes, and bonds denominated in dollars. So the thing that makes a reserve currency is not the currency, it's the bond market. You need something to invest in with maturities. You need, you need a liquid bond market with different maturities, different interest rates. You need dealers, you need auctions, you need payment and clearance systems, you need repo or repurchase agreements, futures, options, when issued trading, custodians. The rule of law, there's a whole massive infrastructure, which we started working on. Bank of England has done the same. China doesn't have any of that. None of it. There's no significant Chinese bond market. They don't have the infrastructure of banks and dealers I described. They don't have the physical infrastructure. And most of all, they don't have a rule of law. You can't throw a Chinese, trust the Chinese as far as you can throw them. And so they have no chance of being a global reserve currency, none. Same with the Russian ruble, same with a lot of other currencies, same with Bitcoin. Show me the Bitcoin bond market. Maybe you can get my attention, but not sooner. Where's the rule of law with Bitcoin? Doesn't exist. So none of those are going to replace the dollar. If you hate a policy or a program, you just hate it, you write op-eds, fine. You're not going to change it unless you bring something to replace it. So for all the criticisms of the dollar, and there are plenty of them, you're not going to dethrone the dollar as the leading global reserve currency unless you can show me what you're going to replace it with. And there's one and only one contender in the world today, which is gold. So that's a whole other conversation. I'm not saying we're going to be on a gold standard tomorrow. Let's break that into two parts. Let's separate confidence, which is a big deal, and stimulus, which is also what I was talking about in the caption you read. As far as China's concerned, yeah, China's a house of cards. It's going to collapse. It's going to be ugly. Hard to say when, but probably sooner than later. And they know it. So we can, and they're not going to be a global reserve currency. So we can put China to one side, but yeah, China's a house of cards. Now, getting it back to the United States. So the first point, let's talk about stimulus first. So yeah, the Fed printed $4 trillion. Congress, we had $1 trillion, what are called baseline budget deficits going into the pandemic. So with no pandemic, we were going to have $1 trillion deficit in 2020 and 2021. Now, Congress put $3 trillion on top of that with rescue and bailout programs last March, April, and May. That was the CARES program, payroll protection plan, aid to hospitals, extended unemployment benefits, higher unemployment benefits, et cetera. I'm not saying any of those things were bad. It was needed to keep things from getting a lot worse. But we put $3 trillion on top of this. So there's $4 trillion for fiscal 2020. They just did $1 trillion last week in the kind of final days of the Trump administration. So that's $5 trillion. And Biden has announced his plan. He's going to have a $2 trillion rescue bailout, so-called stimulus plan now. So that's $7 trillion plus the $1 trillion baseline for fiscal 2021. So there's $8 trillion in deficit spending in 2 fiscal years, $4 trillion of money printing by the Fed. Now, those are the numbers. That's not projections. That's baked in the pie. Just don't call it stimulus. It will have no stimulative effect. Does it, again, as I say, keep the lights on? Yes. Would some people keep their jobs last spring because their employer got payroll protection plans? Yes. Did other people benefit from increased unemployment benefits? Yes. Was a lot of that necessary because things were in such bad shape? Yes. On the money supply, you can print all the money you want. Money printing does not cause inflation.